Attention Black Americans searching for either term or final expense life insurance. In this video, I am going to teach you the 4 things you need to know before buying either term or final expense life insurance. Okay, let's go ahead and dive in. The first thing you need to know before you shop for life insurance, obviously, is the amount of coverage that you need. Now, there are two approaches to determining exactly how much coverage. Well, more specifically, I would say not exactly, but it'll get you ballpark. It'll get you close to what you need. Okay. It might be precise depending on your situation. First is what's called the rule of 10. You essentially just multiply your annual household income by 10 and you add an additional $100,000 per minor child. By adding 100,000 per minor child, I mean $100,000 added to your coverage, not $100,000 on each of the children. So, an example would be if you make $50,000 per year and you have 3 children, that would be $800,000 of coverage on your life. Again, just multiply your annual household income by 10 and add an additional $100,000 per minor child. Second approach is a more precise approach. It is known as the DIME formula. DIME is an acronym that stands for Debt, Income, Mortgage, and Education. This is simple addition. You're adding your liabilities, your income, which you're discounting back using a net present value calculation, your mortgage, your education costs for your kids. You're putting all those numbers into a calculator. Typically, the DIME formula is used by most financial planners to help you determine precisely how much coverage you need. But if you're not working with a financial planner, you don't feel like kind of doing all of that extra work, I just recommend sticking to the rule of 10. It will typically get you where you need to be. Sometimes the DIME formula will get you more coverage. Sometimes the rule of 10 will get you more coverage, but typically you're going to want to use one of these two methods to determine the required coverage amount. Now, once you know how much coverage you need to determine which policy type to implement that coverage. Which policy are you going to use to help you achieve your required coverage amount? Okay, now that has to do with deciding between term insurance and permanent insurance. Now, this video is for those of you looking for either term or final expense insurance. Final expense insurance is a permanent whole life policy. We'll talk more about that later on in this presentation. But the 4 things that are going to drive your decision to choose either a term policy or a permanent policy, again, whole life final expense, will be your needs and preferences, affordability, simplicity, and time duration. I'm going to dive into these just briefly. Needs and preferences has to do with your individual set of circumstances, okay? For example, if you are applying for an SBA loan, SBA loans require that you have life insurance coverage equal to the loan amount. In that particular situation, it might make better sense for you to go for a term insurance policy. Another example is if you are someone who likes the ability to use your life insurance while you are alive. For example, borrowing from your policy to pay off debts, to do some retirement related things, and pay for some unexpected expenses, then that might drive you to use a whole life policy because whole life policies build cash value. Your final expense policy will build cash value. And it may not build very much cash value, but obviously some cash value is better than no cash value. Again, if that is sort of the line of reasoning that you're using. Second option is the affordability. If you're using the rule of 10 or the DIME formula, which is what we just went over to arrive at the required amount of coverage, it's going to be very difficult to achieve that coverage with a permanent insurance policy that is affordable. Whole life insurance, universal life insurance is going to be less affordable than, say, a term insurance policy. Okay, so most people will lean towards term because it is going to help them achieve the required coverage, usually within their budget. Okay, so affordability again is going to be a driving consideration. Simplicity speaks to the fact that permanent life insurance can have a lot of moving parts. Now, this doesn't apply to final expense, but you might consider a policy that's not a final expense policy, that's a permanent policy. In considering that policy, you will want to think about the level of complexity. Permanent life insurance just has a lot of moving parts. So if you're someone that is in the hurry to get coverage, you're trying to just get something in place, then you want to maybe look at doing a term policy because they're typically very straightforward, very easy to understand. There are not as many moving parts and things to take into consideration. And then finally, the time duration. This speaks to how long do you actually need coverage? How long do you need coverage? And is lifetime coverage important to you? Some individuals may only need coverage for a specified period of time. For example, if you are someone who is recently divorced and you're paying child support and alimony, there might be a court order to have life insurance on your life for a specific period of time. Well, that's a temporary situation that you only need life insurance for a temporary situation and you only have it because of that specific situation. So in that particular case, it might make better sense to do a term policy. Another example, going back again to the SBA loan situation, if you're applying for SBA loan, they require life insurance coverage equal to the loan amount. So if you have a 15-year or 20-year business loan, and the lender requires life insurance coverage equal to the loan amount, then you would probably want to look at a term policy, right? Because you're only covering that liability. You're only securing the policy to cover that liability. So again, needs, preferences, affordability, simplicity, and time duration are things you want to take into consideration. But again, I know most of you watching this video, you're looking for either term or final expense. But again, this is just sort of giving you a lay of the land and helping you better understand what should drive your decision to choose a term over another alternative for your coverage, okay? Now, there are two policy classifications. Okay, you have your final expense burial policy. As I said at the very beginning of this presentation, a final expense policy is a whole life policy. The reason why it's called final expense is because it has extremely low coverage. Okay, final expense or burial policies or burial plans are whole life policies that typically have $30,000 or less of coverage. Okay, that's why they're called burial policies or final expense policies, because you can't really pay for much else other than just the person's final expenses, right? All health conditions are accepted, which makes final expense a very popular option for those who are borderline with their health, those who are not sure about their health. If you have a relative for whom you are securing a policy, maybe they're in a nursing home, you have a ton of health conditions going on, you want to have coverage, you don't have to worry about your health being a deciding factor. Final expense is going to be your go-to, again, because they're all non-medical. Now, even though all ages are accepted for final expense, typically those who are 50 and above will be the ones that are going to use final expense. Typically, younger, healthier clients might go for a standard term or a standard whole life or universal life. So again, that's your final expense. Now, for standard plans, think of standard plans as everything that is not a final expense policy. Okay, so that may be term, it may be whole life, universal life, variable universal life. These standard plans are going to be for those with average to good health. Okay, so that's the thing you want to keep in mind. Standard plans are for those with average to good health. It could be term or whole life, universal life. Standard plans have higher coverage amounts than final expense. Again, going back to the dime formula or the rule of 10, if you're using the dime or the rule of 10, let's assume you're using a rule of 10 to arrive at your required coverage amount. Going back to the $50,000 a year, let's say you make 50 grand a year, you got 3 kids, that's $800,000 of coverage. Well, you're not going to be able to get $800,000 of coverage using a final expense plan. Final expense plans are going to be primarily used to supplement your standard plans, assuming that you're able to obtain a standard plan. If you're healthy enough to obtain a standard plan, you'll use a final expense policy to supplement that, because you're not going to be able to obtain enough coverage with the final expense policy to meet the dime or the rule of 10 formula. Also, standard plans may be medical or non-medical. Okay, so again, two policy classifications. If you're searching for final expense, just keep that in mind. Again, anyone can attain coverage, but you're not going to have a lot of coverage. And then obviously your standard plans are all the other plans that have larger coverage amounts and are available with either medical or non-medical qualification criteria. Now, let's talk about the underwriting. The reason why we need to talk about underwriting is because a lot of you are searching for policies. You're searching for the incorrect policy type based on your profile. That's the biggest mistake that a lot of people make when they're looking for life insurance is they're basically searching for the wrong policy based on their individual situation. You got people who are taking they're on high blood pressure medication, they're type 2 diabetic, and they're applying for an accelerated underwriting policy. Okay, so let's talk about the different types of underwriting and the things you need to know. So let's first talk about the streamlined products. So these are all no medical exam underwriting or underwritten policies. There are three types of no medical exam policies. One is known as accelerated underwriting, one is known as simplified issue, and then you have your guaranteed issue. Now, again, most of you are watching this video, you're looking for a no medical exam policy. So let's talk about this, okay, so that you can be clear on what you are applying for, okay? Because if you apply for the wrong thing, you get declined, then you get confused and you're like, well, why did I get declined? What should I apply to? So let's kind of dive in and just kind of make sure you understand. First one, accelerated underwriting. Okay, if you see accelerated underwriting is going to be for the healthiest individuals. You need to have good credit and you need to have good health. You don't need to be taking any medications. If you are taking medications, it needs to be something like aspirin. Okay, I'm being a little facetious, but you get my point. Accelerated underwriting policies have extensive health questions. No medical exam, extensive health questions, immediate approval. These policy types are going to rely heavily on public records. By public records, I mean primarily your MIB report, your MVR report. They will pull a LexisNexis, okay, which is a subscription-based system that many life insurance companies use to basically pull all of the public records information about you. They will look for liens, they will look for judgments, they will look for all of these things out there. Okay, with the accelerated underwriting, again, this video specifically for those of you searching for term or final expense. You're searching for term, you're going to be able to apply for an accelerated underwriting term policy. But make sure that you are perfectly healthy. You don't have anything out there. Make sure that when you do answer the questions for the accelerated underwriting products, that you are truthful on the application, because if you indicate something on the application that contradicts what they pull, for example, your MIB report is your prescription drug report. You may not disclose that you're taking metformin for your diabetes, but guess what? When they pull your MIB report, they're going to see that. So guess what that means? That can knock you out of the accelerated underwriting. You could get declined for that particular product. So again, that's why I'm saying make sure you're applying to the policy underwriting category that fits your profile. Second category of underwriting for streamlined products is known as simplified issue. Now, simplified issue policies provide for immediate approval. They have few health questions. Now, simplified issue also relies on public records, primarily your MVR and your MIB report. MVR is your motor vehicle report. They're going to check for moving traffic violations. They're going to check for all of those things out there that will be on your MVR report. MIB, as I mentioned earlier, is your prescription drug report. So when you answer those questions, they're going to ask you about moving traffic violations. They're going to ask you about your health history, but it's not going to be as extensive as the accelerated underwriting. But you do want to make sure that you're truthful on the application. These policies are going to be they're going to be less stringent. They're going to be a lot more lenient. So hence, they don't ask as many questions, but they do require you to have at least average health. Credit is not considered in the underwriting of simplified issue policies. It may be considered, or usually is considered, for the accelerated underwriting policy. So make sure, again, simplified issue, this is primarily going to be your term and your final expense policies, okay? So if you're looking for final expense, primarily, you're going to you want to probably be looking at your simplified issue, unless, again, you have perfect credit, good health, no medications, no moving traffic violations, etc. Again, Just kind of giving you a rule of thumb. So final is the guaranteed issue. Guaranteed approval, immediate approval. But the thing you need to know about guaranteed issue is guaranteed issue policies have what's called a graded death benefit. Think of guaranteed issue as the step below simplified issue. So if you can't qualify for simplified issue, right, or you can't qualify for accelerated underwriting. So typically you don't qualify for accelerated underwriting, right? Then you'll go for the simplified issue. If you don't qualify for simplified issue, then your guaranteed issue will be your next option. Now, these policies are going to be for those of you who have, you basically can't get approved anywhere else. You're looking for a policy for a niece, a nephew, son, daughter, a grandparent, someone who's in a nursing home, someone who has type 2 diabetes. They just got basically came out of chemo for cancer. Basically, these are going to be the policies you want to look at. These are only going to be final expense. There's no such thing as a term policy that is guaranteed issue. The only policy that you can get that is guaranteed issue is a final expense policy. Going back to the graded death benefit, a graded death benefit is a waiting period. Okay, so let's say you apply for a guaranteed issue policy. You have tons of comorbidities going on, diabetes, high blood pressure. You got all these different things going on. Maybe you have some moving traffic violations. You submit for the guaranteed issue. Let's say it's $15,000. Well, if they're typically going to have what's called a graded death benefit, which means the coverage doesn't start until after you have surpassed the waiting period. So if it's a 2-year graded death benefit plan that is a guaranteed issue plan, that means that you technically do not have coverage until after you have surpassed the 2-year waiting period. Basically, they want to know that you're not going to die within 2 years. I know that sounds a little whatever, but that is essentially how they can offer you the guaranteed issue. It's them saying, look, if you can live at least 2 years past the placement of this policy date, past the placement date of this policy, then we will pay the full death benefit if you pass. Okay. The thing with guaranteed issue, they also are going to typically have lower coverage amounts than simplified issue policies. Okay. Again, if you're applying for final expense, those are going to be either simplified issue or guaranteed issue. Whereas with your term is either going to be simplified issue, accelerated underwriting, or full underwriting, which we'll talk about full underwriting on the next slide. Also, guaranteed issue plans are going to be the most expensive plans that you can pay for. Okay, which makes sense because there's no medical exam, and these are typically for individuals who have basically they can't get insurance anywhere else. So you're going to pay a premium for that coverage. So even say, for example, after you've went past that 2-year graded period, let's say they say there's a 2-year waiting period, you pass that 2-year waiting period, okay, you're still going to be paying for the premiums in that. You're going to still pay for the premiums during that 2-year waiting period. Those premiums are going to be higher than what you would pay for a simplified issue and significantly higher than what you would pay for an accelerated underwriting plan. You're going to typically have lower coverage for the same amount of money that you would probably pay into a simplified issue plan. So here's the thing I want you to take away from this, okay? If you need to know your profile, okay? If you have a ton of things going on, you want guaranteed coverage, you're looking for basically immediate coverage, no health questions, then go for guaranteed issue. If you fit into that category, hey, I got all this stuff going on, don't apply for an accelerated underwriting plan. Don't apply for that because you're going to get declined, right? And if they do offer another plan, they might put a waiting period on you. And then when you if you go to apply for another plan at another company, they are going to see that you've applied for life insurance. Life insurance companies do see that you've applied for life insurance. It comes up on the report. Okay, so just make sure if you're good health, you don't have anything going on, you never had any health issues, you never had anything going on, and if you had something going on, it's been a long time ago, go ahead and do the accelerated underwriting plan. And the reason why you want to do that is, let's say you submit to accelerated underwriting, you get approved. You don't want to apply for a simplified issue if you're perfectly healthy, you got good credit, you don't take any medications. Because if you apply for a simplified issue, then you're not going to get as much coverage as you would probably have gotten if you did the accelerated plan. And if you do get the same amount of coverage, it will be more expensive than it would have been had you done the accelerated underwriting plan. So just make sure that you are applying to the policy type, the underwriting category specifically, that fits your profile. Okay. Now, this is about the fully underwritten policies. This is for those. Now, I know most of you are looking for, you know, again, no medical exam. You're looking for immediate approval. But there might be some situations where it makes sense for you to go ahead and apply for a fully underwritten policy, right? We have to be realistic because guess what? Let me go back to this last slide. You don't, this is only for the healthiest of clients, right? And if you say you're not perfectly healthy, maybe you do a simplified issue, but let's say, for example, a simplified issue doesn't give you the coverage amount that you're looking for. Say you're going for a term policy, the simplified issue may not give you enough coverage, or you might feel that, hey, I'm paying a little bit too much. Well, guess what? You can do the fully underwritten policy type or fully underwritten category. They're going to look at everything. They're going to look at your current health, your past health, your family health. They are going to do an exam because it is a medical exam policy. If it is fully underwritten, you will have to do an exam, and they will request your medical records. They will look at for bankruptcies, collections, charge-offs. They will look for DUIs, DWIs, moving traffic violations, any accidents which resulted in injuries either to yourself or to someone else. Again, liens, judgments, and obviously your criminal history, criminal history, excuse me. So, with that being said, everybody, yeah, this might look a little scary. Now, here's the thing. Here's the con to fully underwritten. The con is it takes a long time. The thing that takes the longest time out of all of these is going to be the medical records request. Now, there are some situations where when your medical records are requested, it can be done electronically. A lot of cases it's not done electronically. The life insurance company has to wait on your doctor's office to send the medical records over. Sometimes the doctor's offices send them over within the month. Sometimes they send them over in 2 weeks. Sometimes it takes them, I've seen them take months and months and months to send over medical records. So the thing that's going to hold up the thing that takes a fully underwritten product so long is the medical records request. However, it is worth it in situations where you may not qualify for the accelerated underwriting, and maybe the simplified issue doesn't give you the amount of coverage you're looking for, or you feel like you're overpaying for that coverage. So going the fully underwritten route gives you more opportunity to get the coverage you're looking for at the price that you want, or close to the price that you want. Because the more information they have about you, the better chances you have at obtaining coverage. And if you get a coverage, you obtain coverage, there's a good chance that it might be something that is within your budget, or obviously the amount of coverage that you're looking for. So again, kind of balance these things out. I know most of you are looking for immediate approval, you're looking for no medical exam, but just understand there are some situations where it might make sense to do a fully underwritten product based on your individual profile. Okay. Now I'm going to wrap up with this, and then I'm going to kind of show you all something later on, but let me just kind of tell you something about the policy features and riders. Now, not all of these riders and features will be available for all policies, but this is for those of you who are seeking term insurance coverage. You know, you can do a 10-year, 15-year, 20-year, 30-year term, right? You can do all of those different options. Let's say you come to the end of the term. One of the biggest concerns that might be for those individuals who are going for term insurance coverage is what happens at the end of the term if I'm uninsurable. Maybe you have things that run in your family, things that, that come up a lot in your family. You may be concerned that, hey, I got this term insurance policy 5 years ago. It's a 10-year term. Your health can change significantly within 5 years, right? Well, fortunately for you, there are life insurance term insurance policies that offer what's called guaranteed insurability rider or annual renewable term riders. Now, guaranteed insurability riders are available when you first apply for a policy. They typically will guarantee that you are able to buy additional life insurance even without actually having to prove that you are insurable. It'll be a specified amount. So you apply for that term, you get approved. There might be an agreement on that term insurance contract that says if you pay for that, typically you pay an additional fee for it when you do apply or approve for the term and you pay your premium. But let's say you pay that premium for the term, your health changes over that term. At the end of the term, you would have probably been uninsurable. Let's say whatever the situation was makes you uninsurable. Well, if you have the GIR, the guaranteed insurability rider, you're going to be able to buy additional life insurance without having to prove that you are insurable. So it's a great way to ensure that you have additional coverage without having to go out and shop and without having to go through underwriting again. Now, annual renewable term is very common. An example of a company that does this is Primerica. Primerica has annually renewable term. Now, what an annually renewable term is say, for example, you come to the end of the term, right? Let's say, again, I'm going to use a 10-year term in all of these examples to keep it simple. 10-year term, right? You're paying for your term insurance policy. What an annual renewable term states is that if you do not want to sign another 10-year contract or 15-year contract or a 20-year contract, you don't want to basically go be locked in, right? You maybe just want to kind of shop around, or maybe you give yourself some time to evaluate some other options. They will do what's called an annual renewal on you. So think of it as like a 1-year term policy. That's all it is. Okay, so every year that term premium will increase. So the thing with annual renewable term is it affords you the opportunity to have coverage, but the how much you pay for that coverage is unknown because that premium will increase. So the difference is by signing the 10 or 15-year contract, your premium is fixed. You know exactly what you're going to pay for that 10 years. So if you sign it up and it's $50 a month when you sign up for it day one, it's going to be $50 a month the entire 10 years, which is 120 months. You're going to pay that same $50 times 120 if it's a 10-year term. If it's an annual renewable term, let's say you come to the end of the term and you do not renew that term, right? Then what they will do is they'll send you a letter that says, hey, you can still maintain insurance coverage. We will just charge you a different amount each year. So as long as you're willing to pay that annual fee, that annual amount, whatever it is to maintain coverage, you can still have insurance. Okay. So again, these are two riders that are commonly available for term. Now, you may see some additional riders when you're looking at term and or permanent policies. Now, these are not going to be applicable to your final expense. Well, let me backtrack. They can be applicable to your final expense as well, depending on the company. Waiver premium, chronic critical terminal illness are very common for both term and whole life. These are what's called living benefits that give you access to your death benefit while you're living. So you do not have to die to be paid out of the death benefit. They will typically advance you 90% of your death benefit if you are terminally ill. It might be 20 or 25% if you are chronically ill. Long-term care can be available with term or permanent policies. Estate planning may be available as well, depending on who you work with. They may throw in your estate planning documents. We will do power of attorney, your healthcare proxy, your trust, which makes sense, right? Because you have life insurance, you need an estate plan as well. You understand the importance of planning for the future if you're shopping for life insurance, right? Well, why the hell are you shopping for life insurance and you don't have a will? You don't have a healthcare proxy. If you have a heart attack and go into a coma, have a stroke, and go into a coma, who is going to make the decision whether or not to pull the plug? Who's going to take care of your kids if you get killed in a car accident? You got 2, 3-year-olds, right? Who's going to take care of those kids? So estate planning is extremely important. And I'm going to kind of dive into that a little bit more in a few seconds here. Term, in some cases, with your term insurance policy or your permanent policy, you can combine whole life and term. I've seen this a lot with the permanent policies, particularly if you do a standard permanent policy. Again, this doesn't apply to final expense, but you can, and depending on company, actually add term insurance to your permanent insurance policy. This is great because it allows you to get more coverage at a price that is more affordable, because if you just do all of it as permanent, it will be cost prohibitive for most people. And so what people will do instead of having it all as term, they basically will they might add a permanent policy to the mix or vice versa to either kind of get the coverage that they're needing without having it break the bank. Okay, so again, these are some riders you might see out there as you're shopping for policies. Ownership and insurable interest has to do with the fact that you can have insurance on a third party. You do not have to be married to them. You don't have to be related to them. The only thing that life insurance companies will require is what's called insurable interest. That means there's a financial relationship between you and that individual. How would your life be impacted if that person died from a financial perspective? What financial loss would you sustain if you lost that person? So that doesn't have to be a wife, doesn't have to be a family member, it could be a business partner, which is known as key man insurance, right? So again, ownership and insurable interest must be established if you are obtaining a policy on a third party. You may also only be the payer on the policy. For example, if you're getting insurance for your mom or your dad, your grandma, auntie, whoever, you can buy a policy. You can be the payer and still have them be the owner and the insured. Okay, so again, all kinds of structures you can have there, just depending on what works best for your situation. And then 1035 exchanges has it only applies to permanent policies, could be final expense or standard whole life or universal life policies. If you have a current final expense policy and you've had that policy for say 10 years or whatever, and maybe that policy is not suiting, not basically meeting your needs anymore. You feel like you can have something that's a bit better, that's more competitive. Plans do change over time. So your whole life policy that you got 10 years ago may not be the best thing that you can have. You can do what's called a 1035 exchange. And what that means is that the money that you've accumulated in the cash value of the final expense policy can be rolled over into a new policy. You can essentially use the money that you've already built into the cash value to buy a new policy. Okay, so it's a great way to make a change in your plan without really having to spend as much money. So a lot of people are shopping for policies. They're like, oh, they got a whole life policy or a universal life policy, and they don't know that that money that those policies have savings. So if you want to switch from that to another plan, guess what? You can do a 1035 exchange. The life insurance company will send you a form. You complete that form. You put in the current policy information and the current life insurance company that you have right now with that final expense policy, they will send that cash value to the new company that you're applying to and approve for. And now you have a new plan. You didn't have to start from scratch. You've basically been able to use that cash value to basically level up and get a better plan. So that's something to keep in mind again for those of you who already have permanent life insurance, specifically final expense policies, and you're looking to get something else. Convertibility speaks only about term. Okay, that basically speaks to the ability to convert your term into a permanent life insurance policy, specifically a whole life policy. So you have a term in some cases, depending on the company, you may be able to take that term, you may be able to convert that term into a whole life policy, but it will not be a dollar for dollar conversion. So if you have a term right now, typically, term is going to have significantly more coverage per dollar invested than a comparable whole life plan. Okay. So if you are in a term policy, maybe you want to get out of term, you're getting older. You want basically your liabilities have decreased. You're 55, you're 50, 55. You don't maybe need as much coverage as you did when you were 35, right? So in that case, it might make sense to, if you have a convertibility option, to convert that term into a whole life plan. Now you have permanent lifetime coverage. You're building cash value, things of that nature. So again, some term policies do allow you to convert the term into whole life, but again, it will not be a dollar for dollar conversion. I forgot to elaborate on that. So you have 100,000 of term, you convert it into whole life. It will not be 100,000 of whole life. It might be 50,000, could be 30,000. Second thing is, if you do the convertibility, any premiums that you paid into the term will not be applied to the whole life. You'll be starting from scratch. Okay, but again, this is good if you're looking to secure permanent coverage and get out of term, especially if you're older, right? And you're concerned about making sure you have coverage as you get older. Okay. Bad decisions create other bad decisions. Okay. Bad decisions create other bad decisions. And when you fail to plan, that's a bad decision. Inaction on things that require action is a bad decision. That's a bad position to be in. And guess what happens? Bad decisions create other bad decisions. And unfortunately, a decision that you make or don't make to plan appropriately for the future can create a situation where whomever you are leaving your life insurance proceeds to, your property to, guess what? They're going to probably make bad decisions because they were not given a plan. They were not given a system, a process to manage what was given to them. Could be property, could be that they are now having to take care of other people that they weren't having to take care of while you were here. You don't realize how much of a void your life, you not being here, can create in your family. And the easiest way, two of the easiest ways to alleviate or to lessen the burden of that is to, number one, have enough life insurance, which we addressed using the dime and the rule of 10 formula, but also making sure that you have an estate plan and that you are organized with the estate plan. You're in a, right now, we all wake up, we go do what we're going to do, right? You get up and you just assume, we all assume that when we go to work or we go on a trip, we all assume that we're going to come back home, right? But the reality of it is, tomorrow is not promised to you, but neither is today. So part of this process of searching for life insurance should also include putting together an estate plan. And by putting together an estate plan, I mean having all of those documents that I mentioned earlier and making sure that you are organized. You get killed in a car accident and you're a single person, does your mother or your sister or your whoever, your niece or nephew, have any idea that you have any life insurance? Do they know where those documents are? That's the kind of stuff you don't think about until you're in that situation. You see what I'm saying? Right? And and I'm going to wrap up here, but I want to show you all a video, okay, of me sitting down with a client who experienced exactly this situation. He, as a result of being put into a situation where there was not an estate plan, which is a bad decision, a form of bad decision making, right? He ended up making bad decisions, right? Because again, bad decisions create more bad decisions. So I'm going to introduce you here to Landon Brooks' story. Again, Estate Planning 101. Kind of tell me a little bit more about your story, kind of the depth that I probably couldn't get the last time you came and talked.
My spending habits are not so good right now. I'd done pretty good for a while, and then things kind of took a downward spiral. My grandmother passed away, and at the time, me and her were living together, and I was a caregiver to her, and it was a very touching time for me, because my grandmother was like my backbone. She was my motivation that, I was gonna be something in life, that, I wanted to prove to her that, I was gonna make something out of myself, contrary to what other people, had said about me.
What did they say about you?
I had a learning disability, that I'd never be anything, you're gonna be a statistic, you're gonna be just like your father. My father was put in jail at an early age when I was 6 years old. My father was in prison for 21 years, got out. I was really excited about him getting out. The family was really excited about him getting out. Brought him into the business. Money started coming up missing. This was an opportunity, for him to come in, for us to get to know each other. And then my mom, once he got out of jail, my sister passed away, and she had 3 kids. And it's just like, one thing right after another, and I was taking so much money out of my business to try to provide for my family, and it never could get it going like it really should go.
People have this misconception about why they're in financial difficulty. They say, well, I don't make enough money, or I spend too much. They're manifestations of what I call the why. The why is what causes the manifestation. And until you address the why, you'll never be free, no matter how much money you have. So what I'm gonna sit down and do is show you how to leverage your existing social media platforms to drive more business towards your photography. So I'm looking forward to sitting down with you, developing that plan, and really seeing your results. But it's going to require a lot of discipline from you. It starts with you dealing with you're going to have to start to cut some stuff off and say no to some stuff and to some people, or else you're not going to have no money to do nothing with.
I'm looking forward to it. I'm just glad that we were able to cross paths like this.
All right.
I'm looking forward to it, really.
Well, I am too.
Really. I was a little nervous because I just don't know what to expect. I've never had anyone to sit down and talk to me about my finances, which are kind of personal to me, and for me to open up and share with him, really helped me see where I was messing up at. So I'm looking forward to him working with me and showing me how to pull all these different aspects together to be successful.
All right, so let's talk about the 5 core documents that you need for your estate plan. They are on the screen. Those 5 documents are healthcare proxy, durable power of attorney, revocable living trust, will, and nomination of guardianship if applicable. All right, so I'm just going to briefly explain in a layman way what each of these documents are and the implication of having the document. Healthcare proxy is a document that gives someone the legal authority to make your healthcare decisions for you if you are unable to make those decisions on your own due to being incapacitated. You're in a vegetative state. You don't know you're in the world. Do you want the plug pulled on you? Do you want them to keep you on the life support system? That is what the healthcare proxy does. It spells out specifically who and when certain decisions should be made based on certain circumstances that might be surrounding your health. So again, healthcare proxy, very commonly associated with the do not resuscitate deal. You ever heard of do not resuscitate? You don't want to be resuscitated? That's the healthcare proxy that spells that out. Durable power of attorney is a document that gives another person the legal authority to make your business decisions for you, okay? Durable power of attorneys are limited in scope, meaning they will tend to have specific instances where the durable power of attorney is valid. It may not be a broad-based document that says this person can do anything. It might be related to certain aspects of that person's affairs, could be related to real estate, could be related to business transactions, non-real estate business transactions, things of that sort, okay? Important, you may not be incapacitated in this instance with the durable power of attorney. It might be that if you are, for example, the child of an older parent, or you're caring for an older parent, or maybe you have a special needs loved one or special needs child, that is where the durable power of attorney would come into play, okay? Revocable living trust is an entity that you create to hold, own, and manage assets during your life. The living trust is going to be great because it allows your beneficiaries to avoid the probate process. Assets left in a trust are not going to go into probate in most cases. Okay, obviously, you want to check your state laws to make sure that your trust is compliant and that you have all of the correct verbiage there. But the main thing is a trust allows assets to be held while you're living if it's a revocable living trust, and you can move assets in and out of that trust, still maintain control of those assets. And if you pass away, those assets will not have to go through the probate process. So that could save your family a significant amount of time and hassle as it relates to dealing with the probate process. A will is a legal document. I always kind of help people understand how a will works alongside a trust. Think of your will as basically a document that expresses your final wishes. A will is really going to be good for transferring, I call them minor assets. Like if you have personal property, you have things that are of sentimental value, purses, shoes, jewelry, photo albums, things of that nature, things that are just really on the grand scheme of things, may not be of major significance from a financial perspective, but might be of significance to you personally. You would want to use a will to transfer those assets. Now, having a will by itself is not going to be sufficient, okay, for an estate plan. You need to have a will and a trust, and obviously these other two documents as well, the healthcare proxy and the POA. But again, the will is going to be great for just, again, minor things that are of personal sentimental value or might be of sentimental value to said beneficiary or beneficiaries if you have more than one. And then your nomination of guardianship is going to keep your children, and this is important if you are a single parent, right? You have minor kids. Maybe the father or the mother is not in the kid's life. Maybe your parents are deceased. Maybe you don't have a close relationship with your brother or sister. You don't really have anyone in your family, right? Maybe you have a best friend, for example, that you want to care for your kids if something happened to you. So the nomination of guardianship will keep your children out of the system. It will keep the government from deciding who takes care of your 5-year-old. If you are killed in a car accident, or if you die in your sleep, or there's been instances where both parents have died. I remember a couple of years ago here in Atlanta, two parents got killed. I knew both of the parents, and both of them were killed um, from a head-on collision car accident. So in that particular case, a nomination of guardianship would have been helpful to ensure that whomever the parents wanted to care for the kids was the individual, or were the individuals that were actually going to care for the kids. Okay. So again, make sure you have these documents. These are your 5 core documents. Now, they might be called different names depending on where you see it. They might call this an advanced healthcare directive. It might, the names might be slightly different just depending on where you see the document. But they're basically doing the same exact thing. Okay. So make sure you have these documents, and make sure you are organized. That goes back to how we started this discussion. If you're going to have an estate plan, you need to be organized with that estate plan. You pass away and you have life insurance, you have your term policy, you have your final expense policy. Maybe you have both of them. Maybe you have only one of the two. You have bank accounts. Maybe you are retired military. You have property in different states that your kids may not know about. Or maybe you don't have any children. Maybe you are a single woman or a single male and you have assets in different places. How is your family going to know how are they going to know where that stuff is? I mean, they're not going to know it through osmosis, right? So you need to be organized with your estate plan. So make sure that all of your asset documents, your deeds to properties that you own, your life insurance policies, all of those things, any liabilities that are out there, right, which will have to be paid once you transition. Hopefully, you have enough life insurance money because you use the rule of 10 or the dime formula. So your beneficiaries should be able to pay those things off, but they need to know, right, what is owed, what's out there, because that becomes attachable to your estate when you transition. So make sure that all of your assets, all your liabilities, all of your accounts, all of the deeds and things of that nature are in a centralized location. Make sure you have both a physical copy and a digital copy of those documents. By physical copy, I mean a paper copy that you keep either at home or in another location, maybe in a safety deposit box at your bank or credit union if they allow you, if they have safety deposit boxes, okay? Also, the digital copy, that one you'll want to keep in a cloud-based storage. I do not recommend saving that on your desktop or using a flash drive for that. That needs to be in a cloud-based storage, Google Drive, Dropbox, iCloud. That way, if something happens to you, right, your beneficiaries or beneficiary, if there's one, should have that login where they can immediately go and access all of those documents, even if they are in a different state or in a different country. Because when you get into estate matters, when you get into these kind of situations, a lot of this stuff is time sensitive. So the decisions need to be made whether or not your son or daughter, whoever, is in the same city. There's time sensitive matters that need to be taken care of. So you want to make sure that you not only have the documents, but you are organizing that whomever you have as the beneficiary to your policies, if you have more than one, that they know about your estate plan. They know exactly how to access that plan in the event of your transition. So now we have come to the end of the presentation. If you are interested in requesting a term or a final expense quote, or if you're interested in applying for a term or final expense policy, you can click the link to the side of this video. It might be a link below the video to the side of the video. Could be a button depending on if you're seeing this on Facebook or YouTube, okay? This is going to give you the opportunity to work with me. My company is the Black Wealth Company. We work with Black families across the United States, helping Black families create, transfer, and protect wealth using life insurance. Okay, today was about protection. So if you're interested in working with my firm, you could click the link to the right side of the video. And thing you need to know is that all of the plans, all of the term and final expense plans are going to be streamlined plans, which means there's no medical exam required. They're either going to be simplified issue, guaranteed issue, or accelerated underwriting. I think there might be one or two categories that are accelerated underwriting, but basically all of the categories that we spoke about today are going to be available with the exception of fully underwritten policies. You will have an immediate decision. There's going to be a few health questions. I say few or no health questions. It does depend on how you answer initial questions as to what subsequent questions you get. But there will be very few questions, and that is to determine which policy type you qualify for. It's going to ask you things about your individual situation, etc. And the system will automatically put you in or present to you the quote for the policy type based on the questions or how you answer the questions, okay? Another thing, I talked about estate planning, okay? That is going to be included with most plan types at no additional cost. Okay, so that is a key thing there because I want to make sure that Black families, Black individuals in this country are properly positioned for the future. And as we get older, as our parents get older, grandparents get older, in most cases, we learn a lot of things that we didn't know when we were younger. And one of those things is the importance of planning. Okay. Estate planning, all of those documents I mentioned, healthcare proxy, durable power of attorney, revocable living trust, the will, all of those documents are going to be included with, I think, most all of the plans. There might be maybe one or two plans that don't include it. You should receive a login where you can actually access those documents, and all you'll need to do is you just put in the required information and you're set. That'll be your estate plan. Okay, so easy breezy, no additional cost. If you are applying for a term policy, all of the term policies have a annual renewability option upon expiration. Now, I've already taught you all what that means, but just in case you need a refresher, the annual renewability option means that if you apply for a 10-year term, okay, and you maintain the policy for that 10 years, at the end of the term, the life insurance company will allow you to maintain coverage without you having to sign another term contract. You will have the option of just paying as you go each year, as long as you are okay paying that elevated premium. Now, I always say, just go ahead. If you come to the end of the term, you need to sign another term or you need to get a permanent policy. You don't want to be in a situation where your premium just continues to go up every year. You don't know what that premium could be in the next 10 years. In 10, 15 years, it might be so expensive you can't afford it. So make sure you have your ducks in a row before the end of the term. There's no reason. Again, this is really for convenience, short-term situation where you get the term. Maybe you want to change. Maybe you're shopping for another term. You don't want to go without insurance. So you keep it, but you're not interested in locking yourself into a 10-year term. So again, or 15 or 20. So again, all the term policies will have an annual renewability option at the end of the term. Um, this link, if you apply, is only going to be for final expense and term. If you are interested in a standard whole life plan or universal life plan, or interested in submitting for a fully underwritten term and or whole life universal life plan, which we really didn't talk about, the index universal life and some of the other plans. We just kept this specific to term and final expense. But if you're interested in any of those other plans, you can contact my office directly. You will see my contact details on the page. Once you click the link out to the side here, it's going to take you to the page. You'll see my name, my email address there, my contact number there. If you know for sure you want to get a permanent policy, whole life, universal life, and you want some more hands-on direction, you can again contact my office at the number. We will not call you. This is a self-service portal, so you will be able to uh, get your quote, apply for the policy, and get approved right on the spot, and actually make and put in your payment details right there on the spot. So we will not call you. But if you are interested in contacting my office, we are in Atlanta. So if you're in the Atlanta area and you'd like to come into my office, maybe because you have a specialized situation, you prefer to come in person, that's totally fine. But those of you outside of Atlanta, you can go to the link out to the side of the video, click that, and you'll be off to the races. I hope all of you have a wonderful, wonderful, blessed, rest of your day or evening, whatever time it is when you're watching this. Take care and be blessed, and I will see you on the next video. Bye for now.